Hello everyone, this is Matthew Frailey with BreakpointTrades.com, bringing you a technical analysis review of the markets, and it's Tuesday, November 22nd, 2021. Here's the table of contents at the top, same general theme as we always stick to. As far as trade ideas, I added just a few new ideas. I had trouble finding a bunch of good long setups. The market is a bit extended here. So basically on the market, indexes all closed up once again today. Small gains ranging anywhere from 0.2 to 0.4%. Okay. Market, again, has been in a very nice uptrend for quite a while. No new DVTs were generated on the KISS charts today. All right. So obviously no changes with the overall trend. That said, we now have a DeMark 13 sequence on the daily charts of the S&P and triple Qs. And if you know DeMark, that's pretty good number. Sometimes you get pullbacks from there, so we'll see if we can get a short-term pullback or not. Short-term also, the CPC, that's the put-call ratio, is at 0.72, so that's quite complacent again in the short-term. Today, cryptocurrencies and of course the related stocks had great days. Mara was in a beautiful coil, busted out nicely. We've had a nice pullback in the precious metals stocks, which I've been looking for. I am now watching to see if they can establish a higher low so that I can have another buying opportunity. GDX had a symmetry break on the move up, so I do think they can form a higher low. And again, I'm Matthew Frailey with BreakpointTrades.com. We've been around since 2003, doing everything from analysis on the general markets, giving tons of trade ideas, and mechanical systems. All right, let's go ahead and move on, get this newsletter started. So, item number 2 below shows the index sector table, what transpired today and this week. So you can see, again, small gains today for the indexes, like I said, anywhere from 0.2 to 0.4%. For the week, everything's up. Clearly, the Russell has played a lot of catch-up. Nice rally. It's starting to finally break out of that consolidation range that it's been stuck in for over 8 months. Okay. Sector-wise, more sectors were up than were down, but you could see a few down sectors. I'm not sure what the deal is with the transports here. The transport index shows it's up 6.9% today, but the IYT is only up about 0.75%. So I'm not sure how they deal with their components there. Otherwise, you could see for the week, all the sectors are up. So it's been a good week. Currencies, US dollar up 0.25%. Cryptos all had great days here. As you can see, nice moves. Commodities, kind of a mixed bag. Precious metals and everything were down. GDX, gold miners, again, which I expected. I am monitoring this pullback. As far as commodities, crude oil down just a tad. Natural gas, big bounce back. It's been chopping around lately. It could be forming a big coil, which I'll show you in the charts when we get there. Copper still can't bounce. I'm going to watch to see if it can. It needs to find support in the area where it's at. We'll look at that. Not much to say on the other commodities. Bonds, both high yield corporate and TLT, were up today. Next, item number 3 shows the economic news calendar. Tomorrow, November 3rd, we have the FOMC. Market's going to pay attention to what they say. Obviously, it's also going to look at the ISM and all that, ADP. There's been concerns about the market or economy slowing down. So we've seen that in GDP numbers, these continual revisions down. So we'll see how the market reacts to this news item tomorrow. Next, let's go and jump to the index chart. So here's the Dow. We don't show it very often, but just like the other indexes, the Dow has rallied nicely off the September lows. It had to pull back early last week, held the 9 EMA. Remember, in an immediate trend, the 9 EMA is always your first support. Okay, that became support. We do have a little RSI divergence forming up here, so take note of that. Next, moving on to our proxy, which is the S&P 500. So that was up again once today, up another 17 points. We do still have a slight RSI divergence here, but again, that could be negated on a continued further push. Obviously, we've had a nice rally off these October lows. The market had the typical weakness in in September. Seasonality, we had a simple zigzag A, B, C correction, right? And we've rallied up nicely. We've been in earnings season. Markets tend to go up higher in earnings season, and that has been the case this time, okay? So again, no changes here on the daily, guys. We just continue to work higher. Next. Chart 6, here's a 2-hour time frame. Again, a few weeks back, I showed this inverse head and shoulder pattern. That played out very nicely. Initial longs would have been this higher low. We just had this monster move up. And the thing I discussed last week and on the weekend video was, if you're a shorter term trader, use these higher lows. Your initial stop would have been here. Then this is your next higher low. Going to move it up to here. Now, again, short term, what we have forming here potentially, I drew an aggressive wedge here. Still may need some oscillations here. And this could be blown out too, depending on how the market reacts to the FOMC. But there is a potential wedge here. The MACD recycled back, but there is still overall divergence between where it is right now and back here with respect to price. So keep an eye on that. But obviously I have no changes in the trend. This would be your immediate higher low. Next. Chart 7, here's the 60-minute time frame. Again, same thing. Nice uptrend. That's your last higher low right there. Next. Chart 8, here's a 15-minute view. So early last week, I talked about all these open gaps. And I said in a strong uptrend, we probably won't fill those gaps anytime soon. Maybe on the next major correction, which who knows, maybe that won't be until next year. But these gaps are left unfilled. We had an open gap here, which was filled. I have an uptrend line, which we've been holding. You could also use that as a guide. You can see we had a little coil yesterday, which we busted to the outside or to the upside from. Moving average ribbon, still bullishly stacked. Finally, chart 9, here's the 5-minute view. So this morning we rallied up for the first couple hours, then spent the rest of the afternoon going sideways. We have a coil forming here, so it's likely to resolve to a gap in the morning. We'll see which way it breaks. Next. Chart 10, here's the daily KISS chart, KISS system. No new DVTs as I stated. We have 4 DVTs from where the system went long back here in early October. When the system first goes long, the initial DVT is basically at that low. So despite the move up today, still no new ones. DVTs pretty conservative here at 44.50. So roughly what? 80 points from here. Next. Chart 11, here's the various cycle time frames. From the daily, half day, which is 195-minute, 2-hour, 60-minute. So, as I mentioned in the comments, we have a DeMark 13. We had a DeMark 9 back here, and then we have a DeMark 13. All right. If you look here, the ribbon is quite stretched right here. So, may need to pull in soon. Remember, the way these ribbons go, they ebb and flow, go through periods of expansion and contraction. When they're bullishly stacked, when they pinch, those give you long opportunities. So, it flipped bullish back here and hasn't had a contraction. So it may be due for a contraction sometime too soon. We have a DeMark 13 showing up. So we'll see how the market responds tomorrow. Interestingly, that we have the FOMC. Let's see. Otherwise, again, the ATR, I use a 14.3 ATR. Those are obviously support on all time frames. Here's the lower time frames. All right. Next. Moving to the triple Qs, maybe a new high. Now, they do not have a divergence on their 5-length RSI like the S&P. Now, remember, the S&P, the divergence is almost negated. We do have a little bit still on the CCI here. The reason I have the CCI indicator on my charts, folks, is because it'll show divergence where MACD and RSIs will not. Also, I like to note whenever it spikes to these big levels, like say way below -200 or way above +200. If you get a divergence in a situation like that, those are fantastic trades. Kind of like back here, early October. So you had the CCI indicator spike almost to -300 here in mid-September at that low. Price bounced, lower high, went down again, and you formed your divergence. That is an awesome long setup. Same thing back here in May. The initial decline is back here. Well, actually this low here spiked up to -300, and then you had your divergent low. So that ended up being a good bottom, just like this one was. So that's why I have the CCI indicator on my charts. But obviously no new changes here on the daily. Next. Chart 13, here's the daily KISS. No new changes here. We have 4 DVTs following this ATR up. Next. Chart 14, here's the cycle time frame. So just like on the S&P, we have a DeMark 13. We also have a little A showing up here. We have a DeMark 13 on the half day. Now, what do the A's represent? Amateur buying. You know, sometimes they're a bit early, as you can see, but a lot of times you at least get a little pullback within a couple days of them. So we do have a little A showing up here. And the 2-hour and 60-minute looks similar to the S&P. 60 minutes still looks okay to me. Maybe we get one more little push tomorrow. But again, FOMC on Wednesday, guys. Next. Chart 15, small caps. They have outperformed. They've been in this range since March. Energy's been building for a long time. I identified this tight coil within the channel that was busted out a couple weeks ago. You had to be patient, and then you can see it found support here at the 20-day moving average there in blue. Nice rally, big rally yesterday. Finally took out this resistance, and a little follow through today. The Russell looks good, guys, for the rest of the year should the market hold up. Next. Chart 16, here's the weekly view. Again, you know, it's been in this range forever. Trying to poke its head a little bit out of here. You can see how the ribbon had finally contracted after all this time going sideways. Trying to curl up here now. Again, you can see how useful the ribbon is, guys. When it gets too wide, you know, for example, back in March 2020 when we had that crazy sell-off in the market with the COVID. See how wide the ribbons got there? You get that, you're due for a decent low, which we got. They were also very long, wide back here in 2018. That was a major bottom. And they get too wide on the upside, you're due for consolidation. The MACD also, you can see how that crossed to the downside back in March. When the MACD is very far above zero, that's not really a good sell signal. So, and what the IWM did was simply go sideways for 8 months. That's what it did. It allowed it to recycle near zero, start curling and crossing back to the upside. Next. Chart 17, here's the weekly KISS system for IWM. So we're getting a new DVT generated this week. Now the final price isn't confirmed until Friday because this is a weekly chart, but we haven't had a new DVT since September, I think. You know, because it's been sideways here. It hasn't been drawing new ones very often, but it started back here in early 2020. So none of these have been hit, just like on all the other weekly charts. So we'll see where this ends at the ends week or on Friday. We'll see what the final DVT price is. All right, guys, that does it for the indexes. Let's move on. Here's the VIX. So really not much to say here on the VIX. VIX rallied off this area, stalled at its middle Bollinger Band and is declining. Now we'll see if it wants to come all the way down again or Do what? Remember, this moves inverse to the market most of the time, except when it becomes uncorrelated, which is when you also want to pay attention to it, like back here. But that uncorrelation indicator flipped back up, so it is no longer uncorrelated. Next. Moving to bonds, here's high yield corporate, JNK. Little bounce today. Still overall in this pattern, you got a downtrend line here, resistance, longer term support. It's been underperforming the market. This is likely to respond to, whatever the Fed says on Wednesday. Next. Chart 20. Here's the chart showing the S&P versus high yield corporate. And you can see clearly this divergence between the two. Usually they move lockstep with each other. On the weekend, I showed a weekly chart, and again, it's been that case for a long time. But they've diverged recently, probably because the Fed has talked about, eventually doing some tapering. But we'll see if this divergence eventually leads to a little pullback in the market or if it's erased. It can be erased by HYG rallying up and starting to play catch up. Now, you might be a little concerned here. The last chart I showed you was JNK. This is HYG. It's the same thing, guys. They're both high yield corporate. Just two different ETFs, but they're basically identical movement. Next. Chart 20, here's TLT 20-year bonds. Kind of chopping around here. For now, it looks like it could be forming some kind of bull flag pattern. Remember, this moves opposite to long-term rates. Should this move higher, long-term rates pull back. The possibility here that I've been discussing is you have a complex ABC correction that is done. And, if this were to rally back up to here, the bond market would be telling you that it doesn't believe that the Fed is going to be lowering rates or, raising rates or stalling its tapering anytime soon. Next. Chart 22, this chart shows you 10 of the major sectors, which I'm not going to go through all the sectors tonight. On the standard newsletter, you can look at them yourself. One interesting thing, like I commented, is the move in the transport index here. It's kind of oddball. That's something that could be possibly corrected on the chart tomorrow. Next. Chart 23, here's IYT. Like I said, it's only up about 0.8% today, whereas the transport index shows that it's up almost 7%. It doesn't jive, so clearly some issue with that, but this is something you could trade, IYT. Again, nice rally off the lows here. So one thing that'd be interesting is, can you form some sort of big cup and handle here? Get some sort of something like that. We'll see, but it's come up into your resistance, so you have a big potential cup. Can it form a handle? We'll see. Next. Chart 24, biotech. So we talked about biotech on the weekend, that it held that support, and then it broke through that resistance on Monday. That was a good area if you didn't go long here with a tight stop. I personally bought and sold this a few times in this pattern, guys. Okay. And I mention that because that's how trading goes. Sometimes you buy and sell something a couple times, 2 or 3 times before you finally, are sure of the pattern. And that's what happened to me here. Went long a couple times, stopped, decided to exit. I even thought about shorting once, but it held that area and I bought it back on this candle with a stop here. And finally, it looks like it's working out. You can see volume going up. And nice move. Got a little resistance here, but remember, biotech is, at least XBI here, is underperformed since February. So it's been the weakest sector all year. It has a lot of potential to, really start playing some catch up to the market. So I think it's a lower risk than a lot of the sectors that are at the highs. All right, let's move on to commodities. Oops. Let me try that again. Oh, let me go back. Okay, sorry about that, guys. Had a software bug. So moving on to commodities, here's DBC. Again, you can see up slightly today. So no changes. It broke out of this area. Nice rally up, and it's in this consolidation phase. Holding the 20-day for now. Next. Chapter 26, crude oil. Held that 20-day, which I discussed on the weekend. Hasn't taken out the high yet, but clearly in a nice uptrend. I'm not going to show the weekly or monthly chart here tonight. Next. Chapter 27, natural gas. Quite volatile lately. Lately, these retests of the 50-day moving average have been great buying opportunities. I talked about it back here. We had a simple ABC correction. Bounced right off that 50-day, big bounce. Came down and tested it, and now it's bouncing again. So notice here that I've drawn what could be a coil forming. This is not a finished coil yet. Remember, coils are usually 5 waves, so you only have, you'd have to start your labeling down here. So you only have technically 1, 2, 3. So 4, 5, 6. That would be your bullish labeling. So we'll see which way this goes. But for a true coil, this needs to oscillate around in here for a while. Now, if we break this lower area, that would be bearish. But for now, it has potential to form some sort of bullish coil. Next. Chapter 28, copper. As I stated, copper broke out of this coil downtrend, stalled near resistance, it's pulled back, and it's been trying to hold this broken trend line. Remember, that is support. We're still watching to see if it can curl up here and rally off this area. Notice your moving average ribbon had flipped bullish. It's now pinching. So there's still potential for it to find support down here, and rally off this trend line. Next. Chapter 29, DBA, agriculture. Again, nothing really to say. Longer term, and it's an uptrend, but it's kind of been choppy. And you could draw a really well-defined trend line here, tagging a lot of these recent highs with just a slight slope to it. Next. Chapter 30, cotton. This coiled recently. I was wondering at the time if it was going to break down in more of a C wave, but it didn't. In fact, it just had a nice coil, busted out. So this is a trade that I missed. BAL is the tradable ETF. Nice move on cotton, though, but down today. Next. Chapter 31, there's the monthly view. Again, another reason I show that is because long-term, it's broken out of this 3, 4, 5, 6, 7, 8-year base, 7.5-year base. So longer term, cotton looks bullish. Pullbacks are probably buying opportunities over time. Next. Moving to cryptocurrencies, here's Bitcoin. Steve on the weekend drew this potential triangle that could be forming. And we'll see. Hasn't broken out of it, but it still needs probably consolidation time in it. We'll see if it needs a little more oscillation here before breaking out. Next. Chapter 33, here's the 2-hour time frame. So in the 2-hour time frame, you got a really perfect coil pattern. We showed that yesterday, busted out of there. This area is now your support. So if you're long Bitcoin, you could probably have a pretty tight stop just below this trend line. Or you can get it maybe a lower risk long again right in here if it backtests this. Next. Chapter 34, Bitcoin Cash. Now, Bitcoin Cash has been lagging the market, but guys, look at this coil forming. So I went long some of this because I can have a tight stop right in here. And these coil patterns, we like coils because they tend to be explosive. So I'm monitoring this one closely. Next. Chapter 35, Ethereum. Cup and handle continues playing out well. I think I read that Goldman Sachs put a $10,000 or $9,000 target for this for the end of the year. End of the year, that's pretty aggressive. This has to double, but with this cryptocurrencies, who the heck knows? And I do think Ethereum will go higher over time. Next. Chapter 36, Polkadot. This also broke out recently. And I don't show this often, but on Kraken, you can get something like an 11% return on your Polkadot, which is insane. Next. Chapter 37, I haven't shown this before. It's Decentraland. Another one of these. This is one I actually bought earlier this year and held it. And on the weekend, I noticed that I had this crazy pop. You can see it had a coil here. And that's what, a lot of these little coins will do. Once in a while, they'll just pop. This area is just nuts. But I'm now interested in this to see if this can form some sort of flag or coil, perhaps. All right, moving on to the stocks now that follow cryptos. Chart 38, Ethereum ETF, moving just like the Ethereum futures. Next. Chart 39, Mara. This has been an awesome trader. Look at this beautiful coil that it set up. We showed that as a long last week. It triggered on Monday. Big pop and follow through today, up 14%. Okay. Next. Chart 40, Hut. Another one, also big move. This has also been a great trader. I identified it back here in July, August, and that was a great area. Coming out of a base. And had another breakout back here. All right, moving on. Chart 41, US dollar, slightly up today again. Still in this same old pattern. We held this uptrend line last time. Moving average ribbons are pinching. This is your main resistance. If we can get through there, dollar could rally up to here, perhaps. Next. Chart 42, gold, down today. The stocks led on this rally. As you can see on the ratio, they've been now lagging. And gold just has kind of a sloppy pattern here. It's possible it could react on the FOMC. We'll see what it does tomorrow. The best view on gold is the weekly time frame, but I'm not going to show that tonight. Next. Chart 43, silver. Stalled at this resistance here. Nice pullback back to the 50-day. Next. Chart 44, GDX. So GDX has been pulling back nicely. Remember, I thought we'd pull back. It was a great rally off this late September low up to the 200-day moving average and a nice pullback. So I am monitoring this for a trigger to go back long. I was short on this move. I finally covered the rest of my short today just in case. I was short via Dust, the triple inverse ETF. So you have this potential inverse head and shoulder pattern that formed. Also, guys, and this is a video I still need to do, but a video on symmetry. So if you look, this rally here broke symmetry, at least downtrend symmetry from this high. So odds do favor some sort of higher low eventually establishing itself. Finally, chart 45 is the 60-minute view with the fibs. So we got a little bit below the 50% fib. Here's your 61.8% fib. So if you do think this is going to form a higher low, you also don't have to time this perfectly. You could scale in a little bit. Personally, I don't want to see it really go below this or much below this 61.8 fib. Okay. We do have a little RSI divergence now forming. And we also have a little bit of MACD divergence. Notice that. All right, guys, now let's move to trade setups. First off, Zebra. This was a long idea of ours a couple weeks ago off that 200-day moving average. Had a nice trigger here. Really nice tight pattern off the 200-day. This is a Motley Fool long-term idea. They also make money, all right? Something like a PE of around 15, which in this environment is freaking cheap, you know, considering what some of this crap trades for these days. Look at today's power move. But one thing I want to show you guys, an educational thing, and this is another thing that I plan to do a video on too eventually. But whenever I see an oversold condition like this, now clearly buying a reversal off the 200-day was a nice setup. Okay. But what I like to do, I like to use multi-time frame analysis. So when I'm looking at the daily here, let's say I'm saying, hey, it's coming down, it's closed slightly below its 200-day. It's oversold. Do I see a trigger on a smaller time frame? So let's take a look at a 2-hour chart. So chart number 47, here's a 2-hour time frame. And this is one of my favorite setups. So again, I look, say an oversold condition on a higher time frame. I zoom down to a smaller. This is a 2-hour from the daily. And I got nice setup here. So what I like to see here is when the daily's oversold, I want to see the MACD cross up on a smaller time frame. I usually don't buy that. What I do is I look for one of these MACD kiss stochastic oversold setups. So you can see the MACD crossed back here. MACD went higher. The stochastic, the fast one, got oversold while the MACD remained positive. It basically had a kiss. So that's your setup right there. That's my trigger. And this is a repeatable setup that I can show you over and over again on many different things. But so you go long here with the stop. Again, you could buy this, but this was your really low risk setup. And then of course you could see what happened just for education. Nice move off the lows, move an average ribbon flip to a bullish configuration. You had your first pullback, which was an ABC. You can also buy those ABC pullbacks, resulted in a pinch, and then boom, move up, increase in volume. Next, chart number 48, Tesla. Crazy, crazy, guys. I talked about this on the weekend, but monster move yesterday. I sold my position there, and then today it was down. We have an inside day. Very extended. You know, eventually, like I said, eventually this will need to work down at least to its 9 EMA. Just unreal moves. Congrats, guys, those of you who bought it back, say in the summer time frame, right around in here. I know quite a few of you did, as well as myself. Next, chart number 49, Facebook or Face Crook. I also talked about this on the weekend. One thing to note here, though, guys. So like I said, we have a divergent low here. You could be long with a stop here. But the bulls still do need to prove themselves. You want to see a break in symmetry. So from the downtrend line, from the downtrend, or from the last high, the first rally was about 2660 points, 26.6. This rally, 26.7. So essentially the same thing. So we do not have a break in symmetry. The bulls really want to see a break in symmetry, a rally larger than this to, firmly establish a higher low. But again, if you are long, to me, this would be a good area for a stop. At least if I was in it. Next. Chart number 50, Amazon. Amazon just cannot get going. As you know, their earnings weren't very good. Next. Chart number 51, cost. Here's an example of a long idea of ours. This is why we like these coil patterns, because you can go long right here, a very tight stop, hell of a move out of there. Congrats if you're still in this. I took my profits, but if you're still in it, just trail those stops up. Next. Chart number 52, NVIDIA, another one of these long ideas of ours. That it was a coil. Look at the beautiful move you've had out of the coil. Awesome trade. Next. Chart number 53, GBT, another one of our long setups from last week. Broke out of the coil. Look at this monster move you've had. 200-day moving average with an initial place to take some profits. Now you can just trail your stops. It's been a hell of a trade. Next. Chart number 54, INVAX. Steve had this as a long idea. Little flag there. It's really worked out nicely. This is an area to take some profits. These 250-day moving averages up here. Next. Chart number 55, Apron. Another long idea of ours. It was a simple horizontal breakout. Broke out yesterday. Followed through today. Pullback, held that resistance, became support. Next. Chart number 56, EVC. It's been choppy, but so far it's been playing out this ascending triangle type pattern. Really had a nice move yesterday. At this point, at minimum, I'd probably have my stop at my entry at this point. Next. Chart number 57, Maxim. Long idea that broke out last week. Finally, big nice pullback today. Again, my style when I have a move like this, take some damn profits. Nice pullback today. But it's been a great trade from that trendline break. Next. Chart number 58, TTWO. Long idea from back in early October out of this flag. Nice pop. Now it's got this resistance up here, which may eventually be taken out. But here you got a higher low established. So a swing stop on any remaining trade could be moved to there. Next. Chart 59, Lucid. This was one of the stars last week. It had a really long trend line consolidation, bust out. So gave a great trade percentage-wise in the 2750 area all the way to 4160. Hopefully you took some profits. Now the pullback is on lighter volume. You see that? So you may be able to get a second buy opportunity on this pullback. My suggestion, look at a smaller time frame, a 2-hour, a 60-minute for some sort of flag, some sort of ABC pattern, something like that. Because I do think it'll form a higher low and then try to rally again. Next. Chart 60, Boeing. You had a perfect double bottom setup. Big rally yesterday. Again, if you're long, this would be your stop. Obviously, it's got to get through these moving averages here, the 50 and 20-day. Next. Chart 61, BLDP. Recent setup. Nice move. Finally a pullback today. Next. Chart 62, OC. One of the setups from early last week. It's been not been an easy trader. It's been very choppy. It initially tried to break this trend line, came down, then broke it. You know, if you were patient, gave you a trade. Pull back today, and I noticed it held this trend line. So at this point, I really wouldn't give it any more room than that. It's been choppy enough. There's a lot easier stuff that's been moving easier than this. Next. Chart 63, CRSP, one of Steve's ideas from last night. Wedge pattern. Tried to move today, came back, but it still looks viable. You got a nice divergence on the MACD and RSI. Next. Chart 64, IBM. I talked about this on the weekend. It goes ex-dividend, I think, on November 9th or 8th. Make sure to check that. But you can get the dividend. It is quite oversold here. At minimum, it probably due for some sort of bounce trade, reversion to mean. Next. Chart 65, here's the 2-hour time frame. So again, on the lower time frame, you had some MACD divergence. Next. Chart 66, GREE, one of Steve's idea, still a valid setup. I redrew the trend line here. You got a big volume here. It could light volume consolidation, could be trying to flag. Next. Chart 67, GEPI. It's one of these covered call ETFs. Pays a decent monthly dividend, but it sells covered calls on the stocks that it takes. These type of dividend plays typically have much lower drawdowns than other high dividend plays. So those of you who like your dividend plays, it just recently paid its dividend, but this pays monthly. Okay, so you have a dividend, the month, early December. It's got a bullish setup here. Next. Chart 68. Here's another one. NUSI, it's another one of these covered call plays. Now this one does even more. It does an options collar. So it goes long stocks of the NASDAQ 100. It then writes covered calls, and it also buys puts protection on those. So these, again, and it also pays a monthly dividend. Like I said, if you play some of these dividend stocks, these type tend to be lower drawdown than some of the other ones. Next. Moving on to some other setups, new setups. This isn't a new setup, but I redrew the coil. MXCT, one to watch. We like these coils, as you know. Next. Chart 70, EA, another coil setting up. Break either direction. Next. Chart 71, Airbnb, ascending triangle setup. Next. Chart 72, EMAM. One from Steve, looks okay still. Next. Chart 73, ICPT. It's been a recent setup. You may still be long from this little downtrend line break. Here I added a resistance trend line. If it can get through there, that would be good. And this is your main resistance trend line. Next. Chart 74, Playboy. I don't know why anyone would want to buy Playboy, but, seems like a dead business with Pornhub. But anyway, you got a nice bottoming pattern. Maybe something interesting. Looks like it could be set up for a trade. Look at your moving average ribbon. Next. Chart 75, LG. Big coil setup. I like that coil. Next. Chart 76. CCNC. Nice little rounded bottom. Look at that volume that's coming to it. Interesting little setup. Low price stock, obviously. And finally, final stock, chart 77. RSKD. This is a 2-hour time frame. I elected to show this time frame because notice got a nice bottoming type horizontal rectangle pattern. Volumes picking up. Moving average ribbon, you can see how it's pinching to hell. So this looks like a low risk long setup, perhaps. All right, guys, that does it. We will see what happens tomorrow on the FOMC. Take care. Have a wonderful evening.